Recent reports indicate a groundbreaking decision by China, which has canceled a staggering $64 billion worth of trade in U.S. agricultural products. This move could send shockwaves through American agriculture, affecting farmers, communities, and the entire industry. It's part of a wider, well-calculated strategy by China to decrease its reliance on U.S. agricultural imports, a trend that has been in motion since 2018. By diversifying where it gets its food and ramping up domestic production, China aims to safeguard its food security while reducing the risks tied to trade tensions with the U.S. This pivot came at the height of the U.S.-China trade war, when President Trump introduced heavy tariffs on Chinese goods, thinking he could pressure China into submission. However, China didn't just roll over. Instead, they fought back in a way that hit the U.S. where it would hurt the most: agriculture. But why agriculture? It's simple. Agriculture is the backbone of rural America. These farming communities not only feed the nation, but also hold a significant amount of political sway. By cutting ties with American farmers, China wasn't merely retaliating, it was sending a political message to Washington. This was a calculated move, a strategic move in a much larger game. Before the trade war, China was by far the largest buyer of U.S. soybeans. In fact, nearly 60% of all U.S. soybean exports were shipped straight to China, worth billions of dollars each year. But when China cut that pipeline off, it wasn't just a financial blow to American farmers. It was akin to pulling the rug out from under an entire industry. Imagine being one of those farmers. Your fields stretch as far as the eye can see. Generations of hard work have gone into this land, and for years your success was tied to one buyer: China. Then, one day, without any warning, you wake up to find out your biggest customer has walked away. No discussions, no negotiations, just gone. It's not just a bad day. It's a catastrophe that echoes through the entire farming community. But China's decision wasn't a random fallout. This move was part of a larger, broader strategy that's reshaping the dynamics of global trade. It's toppling traditional power structures and forcing countries to rethink who holds the cards. The question on everyone's mind is, why? Let's break it down. Understanding the motivations behind this decision unveils the larger picture and helps explain the rapid shifts in the global market. This story starts with the U.S.-China trade war, which you've likely heard of. This was a brutal conflict characterized by tariffs, sanctions, and retaliatory measures. The U.S. hoped to force China to bend to its will by slapping tariffs on Chinese goods. But China didn't just take it quietly. Instead, they hit the U.S. where it hurts the most: agriculture, a sector critical to rural America and politically powerful states. Why target agriculture? Because rural states are political powerhouses. They're home to key voters who shape elections. By targeting American farmers, China was not just hurting the economy. It was sending a clear political message to Washington. Soybeans were at the heart of this trade relationship. These little beans pack a big punch. Before the trade war, the U.S. exported nearly 60% of its soybeans to China, making the country the largest consumer of American soybeans. With billions of dollars at stake, China cutting off that trade wasn't just a financial setback for American farmers. It was a strategic blow to a vital industry. But here's where the story takes an interesting turn. China didn't just walk away and leave a void. No, they turned this moment into an opportunity. They realized something crucial. Relying on a single supplier, especially one as unpredictable as the U.S., was too risky. So they made a bold move to pivot and diversify. They started looking for other suppliers, and this shift wasn't just a temporary reaction to the trade war. It was a strategic effort to secure China's agricultural future for the long term. The question now is, if China stopped buying from the U.S., who would fill the gap? Enter Brazil and Argentina. As soon as China turned its back on American farmers, South America seized the opportunity. Brazil didn't just step into the market, they dominated it. With vast fertile lands and a growing agricultural industry, Brazil had the perfect conditions to take over. And they didn't stop there. Brazil ramped up soybean production like never before. Farmers planted more, harvested more, and exported more than they ever had. But Brazil didn't just stop at increasing production. They invested heavily in infrastructure. They built new roads, expanded ports, and streamlined their supply chains to make it easier to get goods to China. By 2023, Brazil wasn't just a competitor in the market. It was the world's largest soybean exporter, outpacing the U.S. and cementing its place as China's go-to supplier. But Brazil wasn't alone. Argentina, while smaller in comparison, also played a significant role. Argentina turned its focus to other key crops like corn and wheat, becoming a reliable backup for China's growing agricultural demands. Together, these two nations helped fill the void left by the U.S., and then some. But what's even more fascinating is that China didn't just buy crops from South America. They invested heavily in the region. China poured money into Brazil's infrastructure, funded agricultural projects, and negotiated long-term trade deals, all to sideline the U.S. entirely. This wasn't just about finding new suppliers. It was about building lasting relationships that would reshape global trade for the future. China's actions aren't just about securing food supplies. They're about ensuring power. A nation that controls its food supply has power on the global stage. And by building this network of suppliers across South America, China is ensuring that it will never find itself vulnerable again. But what's going on in the U.S. while all this is happening? Let's be honest, things aren't looking great. When an entire industry loses its largest customer, the consequences are severe. Fields of soybeans rot in silos because there's no one to buy them. Tractors sit idle because planting isn't worth the cost. Small towns built on farming are now ghost towns, as farmers go bankrupt. In fact, over 2,000 family farms filed for bankruptcy in the first year alone after China cut ties. Entire communities built around agriculture are starting to crumble. Schools shut down. Businesses close their doors. Families pack up and leave, looking for opportunities elsewhere. But the emotional toll is even more profound. Farming isn't just a job, it's a way of life. Losing that isn't just a financial loss, it's the loss of an identity. The rise in farmer suicides is a heartbreaking reminder of the devastation this crisis has caused. Even for farmers trying to adapt, the road ahead is tough. Some are exploring new markets in Europe or Asia, but rebuilding those relationships takes time. Time that most farmers don't have. With Brazil and Argentina now firmly entrenched in China's market, the competition is fiercer than ever. So can U.S. agriculture recover, or is this the beginning of the end for America's dominance in global farming? Recovery is possible, but it will take a monumental effort. Farmers must diversify. Relying on one major buyer, whether it's China or anyone else, is no longer an option. They must explore new markets, build new relationships, and expand their reach. Innovation is also key. Precision farming, climate-resistant crops, and sustainable practices aren't just buzzwords anymore. They're necessities. The U.S. has the resources and technology to lead the way, but it's time to use them. Government support will also play a crucial role in recovery. But this isn't just about subsidies. Farmers need policies that encourage long-term growth, such as investments in infrastructure and incentives for exporting to new markets. However, let's be real, this won't be easy. While the U.S. scrambles to recover, China, Brazil, and Argentina are already miles ahead. China's decision to sever ties with U.S. agriculture wasn't just a tactic in the trade war, it was a power move with far-reaching consequences. It exposed America's vulnerabilities, boosted South America's rise, and solidified China's position as a dominant global leader. This isn't just a story about soybeans or trade deals. It's about power, survival, and the shifting balance of global influence. China is playing the long game, and they're playing it well. The U.S.? Let's just say it has a lot of catching up to do. That's the latest on today's top stories. What are your thoughts? If you'd like to dive deeper into any of these topics, feel free to leave a comment. Thanks for tuning in, stay informed, and stay curious. We'll see you next time. Take care!